Hey everyone, welcome to LJ Daily Housing Market Update. Today is January 22nd, 2024, and let's get started with our interest rates. Your national interest rates for 30-year fixed conventional loans were around 6.87. They came down around 5 basis points from the morning. These are your national averages. Your 30-year fixed FHA, they were hovering around 6.12. And this was according to your Mortgage News Daily, and this is your top tier scenario. Next is going to be your Freddie Mac. They instead of doing daily, they do a weekly, and they're hovering around 6.6 for your 30-year conventional conforming loans, compared to your 15-year, which is 5.76. 5.76 for your 15 year. So if you are thinking about going with 15 year, you should compare that with 30 years and make extra payments. So this way you're not tied into paying your higher 15-year mortgage. You can go with 30 years, make extra payments, and still knock down many years. Okay. When we're talking about these interest rates, these are your headlines, and there are many factors when it comes to your interest rates. You might say, hey, if I go to one lender and they're not giving me this rate compared to the others, what is the reason? There are many factors when it comes to interest rates. One of them could be your credit scores. The higher your credit scores, the better interest rates that you will get. Your home location, depending on where you live, by the state or the county, that can make a difference. Your down payment, if you put larger down payment, that means that you will pay lower interest rates. Your loan term, also, if you go with the shorter loan term, you will pay lower interest rates and lower overall fees as well. Your loan type, depending on FHA, conventional, non-QM, really depending on the loan that your loan officer is providing, that can make a big difference. And your residency, are you going to live there or are you going to rent it out? That will make a difference. And how many unit is it? Is it single family? Is it two family, three family? The more units you have, the higher interest rate you typically pay. Okay, these are your interest rates factors. Next, let's look at your buying power. So, when the interest rates are going lower and lower, you have your buying power is increasing, is going up and up. So let's compare your 6.92 versus 7.67. So for the same monthly mortgage payment of $4,600 in this chart, you guys can see that if you were to go with 7.67, you would qualify for only $650,000 loan amount compared to $700,000 with your 6.92. Makes a big difference. So if you have a pre-approval a couple of months back or at least a year back, you want to go back to your loan officer and see how much you qualify with today's interest rates. Okay, let's do an affordability calculator here. We will use two different scenarios. Let's say the first one, the household income is $80,000. They're making down payment. They're gonna put a use down payment of $60,000. They cleared all their debt. This is very rare cases, but they cleared all their debt. They don't have any minimum payments. We're gonna use 6.92 as interest rate sample here, and your property tax is around $5,000, and your property insurance $1,500. This person with DTI of 45% can comfortably buy $432,000 property, and their monthly mortgage payment is going to be $3,000. Okay, so you can look at this scenario versus if someone is making a household income of $120,000, they're going to use down payment $80,000. Their monthly debt is around $350, which are the minimum payments that they have to make on their credit cards and stuff like that. Everything else remains the same. Property tax is $8,000, and this family can purchase a house up to $588,000, but their mortgage payment is going to be $4,100. Okay, their debt to income ratio is going to be 45%. So there's many factors when it comes to your affordability. Let's say you have higher your monthly debt, then you're going to qualify for less. If you are preparing to buy a house, you want to clear out your debt, your minimum, your credit cards and all that. It will increase your overall affordability. Okay. Next, let's look at your inflation. Inflation is at 3.35 as of the last reading that we have. We are waiting for the Fed to give us an update next month, and we'll keep you updated. The lower your inflation rate is a good sign for the housing market. So when will these Feds actually cut these rates? The chances are in March or May, according to MBS Highways chart here. So don't expect them this month. The home prices all has been rising for a couple of years now, but it all depends from county to county. So don't just assume that, hey, my area the prices are jumping up like this. No, let's do the comps. Let hire a real estate agent that can do your comps and actually save you some money when it comes to your offers. Okay, but the prices overall have already been increasing from 2020 and up. But guess what? It might even increase higher if you're waiting for more buyers or the interest rates to come down, and there will be more buyers looking for the same property, and you will have a bidding war. Okay, these are a couple of headlines for you guys. Mortgage, according to CNBC, mortgage interest rates expected to drop in 2024. We have been saying that for quite some time now. The magic mortgage rate that could unfreeze the housing market. We're thinking around 5%. Once the mortgage rates hit 5%, it'll be no brainer for the sellers to sell their property who are locked in at a low interest rate and make that move. So those were your headlines. Okay. Next we have is that your single woman now dominate home buying landscape. A report shows from Maxwell found that the single woman accounted for 18% of home buying in 2023. Overall, they own 2.71 million homes more than single men. So you guys can see that the single women are purchasing houses. And now you guys can see the next one here is your are you downsizing or upgrading? It really depends on your age. If the buyer is younger than 57, tend to buy larger homes. Why? Because they're going to have a family, they want a bigger home. On the other hand, if you're older than 57, you're downsizing. Why? Now you're going into retirement, you don't need that huge space, and now you're going to downsize. Okay. How about some loan programs? You have your FHA here. FHA it's a good program. It's a helping hand. I always want you to compare this loan with your conventional using loan estimates from your loan officer. So then you can see exactly what is your true cost for FHA versus your conventional. So you guys can see here your credit scores needed for FHA is 580 in most cases. There might be some banks that might do it lower and charge you higher interest rate, but 580 is what the credit score needs to be. Your down payment you can put down as low as 3.5%. So if you do put down 3.5%, make sure that you know or you're aware your mortgage insurance never goes away. If you do put down 10 or more percent, it does go away, but after 11 years. Okay, your debt to income it can be up to 54%. Also, on top of your down payment of 3.5, you also need closing cost, which is going to be 4 to 6% for your FHA. Also with FHA, you have to worry about paying upfront cost to for 1.75%, which is a one-time fee. It can be added to the loan, but still you're paying for it. And it must be your primary residence. So you must live there for at least 1 year if you want to qualify for FHA. Okay. Every day we want to teach you one term to learn for real estate. Today we want to go over APR. When you look at APR, it means that it's annual percentage rate. It is better to know your APR than just to know interest rate. Why? Because it tells you the true cost to borrow money expressed as a yearly percentage. And it includes your interest rate plus other charges or fees. So if someone can tell you, hey, I'm going to give you 6% interest rate, but your APR is 8%, you should be like, why is that? Because they're charging a lot of fees. So don't just compare your interest rate, compare the APR. That's why we always say, get your loan estimate. It will tell you what your APR will be. And compare that with your, other brokers and see which one you want to go with. Okay, some new listings here on the market. We have one new rental coming in Richmond Hill. It's listed for $3,000. It's 3 bedrooms, 2 baths here in Richmond Hill. If you're looking for rental, we have this listing here in Lynbrook. Is a commercial listing for $200,000. It's business for sale. So if you're looking for a business for sale in Lynbrook or in the area, you can let us know. Another property here is in South Ozone Park, listed for 759. It's 3 bedrooms, 2.5 bathrooms, nice corner lot size. So if you're looking in South Ozone Park, you guys can reach out. Next one is in Franklin Square, and this is listed for 1.269. It is 5 bedrooms, 2.5 bathrooms, new construction. It's a very solid property, 13,000 taxes. The next one is in Leviton here, listed for 1.19. It is 5 bedrooms, 3.5 bathrooms, and the taxes are $10,000. And the last one here is going to be in West Hempstead, listed for 849. It has 3 bedrooms, 3 bathrooms, and property taxes are $15,000. Okay. So if someone tells you should I buy or not, should I rent? If you're planning to live in an area for longer than 5 years, it makes no sense to rent compared to buying because you're actually building equity. You're not building any equity with rentals. There are times where rentals does make sense when you want to live there for short term and you're not too sure. But you guys can look at the chart here that this shows for your Queens County, your appreciation over the last 5 years, 10 years, and 63 years. You guys can see that is above 4%, 4, 5, or 6%, depending on which area you're looking in or which time frame you're looking at. But overall, housing market is always on the upsell instead of down. And this is for your Nassau stats, very similar to that. Okay. Who is involved in real estate? Every video that we're making, we're trying to show you guys one or two people that's important in your transaction. Today, let's go over your attorney. Attorney number 5, it plays a huge role in your transaction. You have your own attorney as a buyer. The seller has their own attorney as a seller. So you will want to make sure that, first of all, how did you get in touch with this attorney? Was it referred by your agent? Was it referred by a third party? Was it referred by the selling agent? You want to make sure that you are the one who's picking out this attorney. Okay, this person should be on your side, should be explaining everything inside out before you signing the contract. You don't want to hire an attorney that's not picking up your phone calls, not willing to meet in person, or whatever the case might be. Always go with a reliable person because that person is going to be all the way at the closing table with you. Okay. Next, guys, if you're planning to purchase in 2024, budget yourself. Make sure you have your income, your savings, you're taking care of your debts, and you're increasing your credit score as much as possible. Okay, your down payment, you want to make sure you have enough for your down payment, which is 3 to 20%, depending on which loan program that you want to go with, and you have your closing costs, depending on which program, 3 to 5% as well. Okay. When it comes to your credit scores, if you're brand new, you want to make sure your credit scores first target should be 580. If you already hit that, it should be 620. If you already surpassed that, then it should be 690 or above. Some people have 800 credit scores. Great. They can qualify. But if they were to add a cosigner, they need to make sure that their cosigner also has good credit. If, let's say, the cosigner has 500 credit scores and you have 800, that cosigner will not qualify for that mortgage. And if someone tells you, a loan officer tells you, hey, I can offer you 6% today, 5%, 4%, you should question that. Hey, if the national averages are in 6.5, 6.7, 6.9, how come this person is giving me 5%? You should ask them, hey, are you asking me to buy down the rate? If yes, what is my cost and what is my savings? What is going to cost me to buy down that rate and how much is it going to save me on monthly basis? Okay. If in this example, if it's going to cost you $4,000, but it's going to save you only $82 per month, it's going to take you 4 years to get that money back. Okay, it might make sense, might not make sense, but at least you should know how come they're offering you lower interest rates. Guys, we have 16 loan officer at LJ Mortgage team, 70 plus loan real estate agents on our LJ Realty team. If you guys need any help, I'm the broker here. I can help you guys out. If you're a real estate agent looking to change your brokerage, we don't charge any office fees, no desk fees. We give you all the tools for KV Core, Transaction Desk, Geodata, Microsoft Teams. So you guys can reach out to me and I can assist you guys there. Otherwise, thank you so much for watching. I'll be back tomorrow with another report. You guys take care.